Welcome to Talking Heads on USA Global TV, starring the one and only wonderful Dr. JACALYN. It's a prestigious place where world-class influencers and experts meet, and where you'll find the most trusted advisors and coaches for all things in life and business. Visit usaglobaltv.com to sign up for our newsletter, get the value you need, and be first in line to learn about events and giveaways and other valuable content. Connect with us. Email Dr. JACALYN at usaglobaltv.com to talk about how you can become part of USA Global TV. That's USA Global TV, where the doctor is always in.
Hello and welcome to USA Global TV, and we're thrilled to announce we are also on the radio. We have 3 radio channels as well, so you can watch or listen 24 hours a day, 7 days a week. I'm Dr. JACALYN KERBECK, and our show today is What's Trending. We're going to be talking all about real estate. Is it the time to buy? Is it the time to rent? What is one to do? What's going on with interest rates? Everything that you need to know, you want to know, you'll find out here today. Joining me is my friend. She's also the co-host of this show. She's an expert presenter on our Talking Heads platform, and she is also a panelist on our new show that is coming out, which is called A Woman's Prerogative. Let's welcome Kathy Fulton to the show. Hi, Kathy.
Hey, good morning. How are you?
Great, thanks. How are you doing?
I'm great. It's Thursday. It's my favorite day of the week. I love doing this.
Well, I love doing it as well, and I'm glad that you're here. And I always feel like when you and I are in front of this beautiful scene, I feel like a young girl, like I can just run through the flowers and let my hair down and just have fun.
I know. Or like, ride your bike or do something, just totally carefree. Leave all your troubles behind, right?
Absolutely. You've brought another wonderful guest who's backstage. And before we bring her out, I'm going to spotlight you. And if you can share with our audience about your background as an interior designer, the work that you do and how you help your clients, that would be fantastic.
Yeah, perfect. So what I do is what we do is I have a full service interior design firm, and we have been in business for 22 years. Sometimes it's hard for me to comprehend that much time has passed by, but we can design any space that you live in, kitchens, bathrooms, bedrooms, great rooms. One of our biggest requests during the pandemic has been taking basements and taking them from particularly unfinished basements and taking them from a shell to almost what a lot of people would refer to as an in-law suite, meaning adding bedrooms, bathrooms, miniature kitchens, theater rooms. So that's been a big request. And another thing that we do is exterior design. And not everybody can do this. We've been doing it for years. We help you with like deck selections. A lot of people have built pools during this pandemic because they can't go on vacation. So it's like they create a staycation at home. And there are an inordinate amount of details that go into creating an outdoor space that is what you really want it to be, meaning like pool finishes, tile, and coping and hardscapes, and right down to the outdoor furniture. Because one important point is not all outdoor furniture is the same. A lot of people think, well, I'll just go buy this $2,000 set and I'm going to expect it to last a lifetime. It's never going to happen. And so we have some fantastic ideas to get you pointed in the right direction so that you're not... So we create the right expectations, particularly for exterior spaces. So that's pretty much what we do.
Fantastic. Thank you so much for sharing that. I know as a result of the pandemic, people have change the way they're living, who they're living with, where they're living. And I think it's fantastic that you're doing the work that you're doing to help people in their existing space. And we're going to be speaking with our guest about what to do when you want to move into a new space. Do you buy? Do you rent? I have had a real estate license for years. It's inactive right now, and it's quite an interesting market right now. So I'm really excited to bring out our guest. Her name is Ashley Smith, and she is the Senior Vice President, Senior Loan Officer at Atlantic Coast Mortgage. So let's pick her brain a little bit and find out what is going on. Welcome, Ashley, to the program.
Good morning.
Hi, Ashley.
Hi, ladies. Thank you for having me on today. I really appreciate it.
Well,
Yeah,
it's our thrill to have you, because this is a topic we actually haven't talked about on this platform yet. So we've got between 20 and 25 live shows. So you're going to be a first, which is great. So I hope you'll come back and give us additional information. So
Absolutely.
Tell us a little bit about your background before we get into what's going on in the market today.
Sure, not a problem. I have been a mortgage loan officer, licensed professional, servicing primarily the DC metro area for the past 20 years. I got in the business when I was 20 years old and was actually recruited while working at Morton's Steakhouse, which is a popular steakhouse in the United States. I was a hostess manager, and a loan officer had come in. I was going to college for journalism, public relations. And I was going to college and, working there part-time. And I actually had a couple loan officers come in that do what I do today. And they said, you know what, you would be excellent in this space. And, it's more of a personality, personable type of business than it is a math related or a finance related business. Of course, we delve into short-term and long-term financial goals. We go into the depths of what someone needs to do to qualify to purchase a home. But more so than anything, it's about being there, being available, being able to best explain to a home buyer or somebody that's currently renting that wants to buy a home, best explaining how to do that, and having the bedside manner of, this is a financial transaction, one of the biggest ones in your entire life. But it's something that we can coddle and make sure that you're comfortable with. So these two gentlemen said, you'd be excellent in this space. I learned, hit the ground running. Honestly, when I got in the business, it was a little bit slower, but within 6 months, there was a huge refinance boom, and that kind of was like throwing me to the wolves. So I learned very quickly, and basically adapted it. Within 2.5, 3 years, I was promoted to my own office. And since then have, climbed the ladder, so to speak, and taken my business from, 15, 20 million to over 200 million a year. So it's been quite a journey. I work with a lot of amazing people, and just blessed to be doing this as my career.
Wow, congratulations. And what a great story that you were at Morton's, one of my favorite places.
I'm actually going there tonight, so I'm pretty pumped. Yeah.
That's so fantastic. And that's a big number, 200 million.
Yeah.
Wow.
Yeah. The market, I will say the market definitely dictated a lot of what that business was, especially with the prior year being a large majority of people refinancing their homes.
Yeah. Well, I always say there's no better way to find out who you are and hone your craft than baptism by fire, which it sounds like that's what you went through, right?
Yeah.
But look at you now. That's amazing. So we're in, just full disclosure, we're in a networking group together called BNI. And so you and I chit chat a little bit, the trying to get around to everybody during the meeting. But yesterday we were just kind of catching up, and can you speak more to the interest rates today?
Sure.
And what that's going to mean for potential.
Yeah. There are a lot of people right now, especially if you're listening to either a radio station, if you're watching TV, you can't avoid hearing about interest rates on the rise. And the Federal Reserve has explained that they plan to raise interest rates on short-term debts, which they control, anything tied to prime, this year, which is pretty shocking to most people. And it's kind of driven the long-term rates up as well. There's a lot of liquidity in the market. I, by no means, pretend to be an economist. However, this is what I live, breathe on a daily basis. And I have seen rates just on the rise significantly over the last probably 2 months. We ended the year last year in, I think, the high 2s, low 3s. In the end of 2021. And now since then, we're breaching 5, dependent upon the day and the program. It could be anywhere from the mid 4s to the mid 5s in terms of interest rate, which historically speaking is still very low. It's better than renting. It's better than, sitting in a situation where you're paying someone else's mortgage and they're reaping the benefit. So my advice, even though rates are on the rise, please still consider purchasing. It's an American dream. It's a global dream to own real estate, because it's honestly one of your best bets as far as your future, your retirement, your portfolio, etc. So don't let the interest rates deter you. I think it's a great time to buy, but get in now, because we don't know where they're going. And it's quite possible that we could be facing 6% plus by the end of the year. I mean, I don't have a crystal ball. I'm not predicting that by any means. However, the sooner you get off the fence and start talking to someone like myself about, what a monthly payment would look like, what the cash to close down payment situation would look like under certain products, the more we can help guide you and help make that financial decision a little bit easier for you.
Right. No, I totally agree. Just take the plunge, because it doesn't seem like it's going to go back down anytime soon. Right. So,
yeah,
okay, so we live in Northern Virginia and the inventory has been low. So, and I know you interface with a lot of really great agents here in this area. So, is it still just massive competition and
yes.
50 offers for one house? And how can you speak to that?
Absolutely. This has been kind of the norm for the past 2 years since the pandemic. I think that a lot of people are sitting in their homes, whether they're renting or they own, and staring at the same 4 walls for 2 years and having to either work from home or, being in a situation where they feel like, oh my gosh, I didn't realize this house was as small as it felt because I was always at the office, or I was always out on vacation or doing something. So you have an influx of people looking to move for that very reason, and or building on their home, like you said, finishing basements, doing pools, etc. And that's why you see the supply chain, issues that you see. That's why you see the inflation issues, because there's such a demand for it, and there's just not, the supply wasn't there and wasn't being worked on because of the pandemic. You also have a lot of people that refinanced in the mid 2s, low 2s over the course of the last 2 years. Right when the pandemic hit, rates hit like 2.2 to 2.8, depending upon a 15-year, 20-year, 30-year. And I can tell you right now, I refinanced almost all of my pipeline within the last 2 years. So you have all those people that refinanced that are sitting in the 2s, and why would they want to leave their home at a 2% rate and go to a 5% rate if they don't have to? So you're not seeing a lot of inventory come on for, I think, that reason. And I just feel like people are saying, where am I going to go? If I sell, there's nothing for me to buy on the other end that's going to be either as big, or I'm going to be in a situation where I'm carrying 2 mortgages because there's no inventory for me to buy on the other end. And if I can't sell, I'm in a situation where I'm holding 2 loans. So it's kind of a bottleneck right now. I think with rising interest rates, it's possible that we will see a little bit of a slowdown, a little bit of a market correction. However, it depends on where you're located. We're in the DC metro area. It's very transient. So you have a lot of people coming in from Amazon, Apple, all over, Google. You have all the big name companies here, and even more so coming into the DC metro area, that we're not seeing that slowdown. Obviously there are different pockets, more rural, more suburban, Midwest, et cetera, that might slow down or see that first. And once you start start seeing that across the United States.
Yeah. Well,
Thank you,
so
Ashley.
yeah, and
Mhm.
you used one word or one phrase, that the market will correct itself. Okay, so during that correction, can you speak to or explain? Because these are things that I think about. It's like, okay, so interest rates have gone up. Okay, so my, last month my house was worth X. Now, how is all that going to sift out? Is with interest rates going
Mhm.
up, is the value of my home going to be, is it going to lose value? How does How does all that work?
You know, you know, I do think
Looks like Ashley's having some,
Technical difficulties.
yes. I'm just going to
Good
take
old
her off
Wi-Fi.
until she's back. Here she is. Hi, welcome
Can you
back.
see me? Okay.
Yeah.
Sorry about that. So basically, to answer your question, I think if you're in a hot metropolitan area, if you're in any area where you've seen a just run up on your equity, I don't feel like you're going to see that plummet. We might see a little bit of a correction, maybe a 5-10% correction, but overall, and just speaking from what I see in terms of buyers qualifying, you have a lot of people that sat on cash and liquidity for the past 2 years. They weren't going on vacation. They weren't out spending money on gas. They were sitting in their homes. So now that's, I think, sparked a lot of the reasons why we see this equity. People can afford and they have saved for this ability to go purchase at a higher purchase price. Now, where it's tough and difficult is for the first-time home buyer. So those that are just out of college or have been living in their parents' basement, and now they're like, oh, I want to go buy a house, or they've been renting. Now they're kind of in a situation where there's this huge divide. I mean, you have dual income families, established workers that are now buying in the, I've been saying 1.4 is the new million around here because it's that crazy. But now you are seeing that segment of the market being able to purchase, but the first-time home buyer who doesn't have a lot of cash saved is being kind of shut out of the market because the prices are just so inflated in that, lower like $300,000 to $500,000 range in our area. I do feel like Fannie Mae and Freddie Mac, I know I've heard from MBA, who's the Mortgage Bankers Association, that they're working on solutions for first timers. However, I would love for them to increase some of these programs. There's one called Home Possible and Home Ready through Fannie Mae and Freddie Mac, where the income limits for a household are in the 102 range, 102,000. That's just not enough. I think it needs to be increased. And that particular program allows buyers to do as little as 3% down, reduced interest rates, reduced PMI, mortgage insurance. So it's a powerful program, but if the income limits are such that it's a square peg in a round hole, you're not getting anybody into that program that really should and would most benefit from it.
Ashley, I have family in the Northern Virginia area, and it's amazing to me they can fit any more people there, right? It's such a growing area. And to your point, I was going to ask you about the first-time home buyers. There are a lot of millennials there, and also a lot of people who've been reloaded from other places to work in these big organizations. So what advice can you give to people? Maybe they have been living in the basement, and maybe now's not the best time for them, but what steps can they take now to prepare so they can be a homeowner?
That's actually a really good question. I think what would be huge relief for first-time home buyers, and what I see a lot of, is student loan debt reform or forgiveness program actually pans out and comes through. That's going to be huge for that first-time home buyer segment. I can't tell you how many times I pull credit and I see, an exorbitant amount of student loans. And we actually, the calculations from and directive from Fannie Mae and Freddie Mac, the way we have to calculate the payment, even if there is, a deferment and they're not currently paying because either COVID or it's just regularly deferred, we're still having a kind of payment against these buyers. And it's a pretty hefty number. So I think if there were legislation and or correction in the guidelines to reduce those payments, that would help first timers. But to your question, I think, saving money would be great, but I think more so paying down debt. There are a lot of programs, like I said, that are as little as 3% down. There are a lot of grant programs. So if you want to get in as a first-time home buyer, you're better off paying down high debt and installment loans like cars, like a jewelry account, something that's fixed, meaning it's not run up and run down like a credit card, but an installment loan similar to a car payment. If you can get those payments in most cases under 10 months, we can exclude that debt. And that's going to help you from a debt to income ratio perspective get into a home. The good thing is that Fannie Mae and Freddie Mac have actually expanded guidelines to where we can sometimes, if the credit's excellent, go up to 50% or 49.99% of someone's gross income. We don't want to get back in a situation like 2008 where we have foreclosures and the bubbles burst, so to speak. However, buyers are a little bit more aware. We're putting them in programs that are 30-year fixed. They're typically not taking ARMs under these programs, meaning variable rates. So we're putting them in more stable, secure mortgage options than we were back in 2008 when that bubble burst. So there are definitely great options out there. I would say try to pay down debt more so than saving for a down payment, because the down payment options for first-time home buyers are excellent. As little as 3% down, in some cases grants that can get you 100% financing.
Wow.
Great information. Thanks for touching on the student loan debt forgiveness, because I think I read something that's been extended at least till August, and they figure out what they're doing. I'm wondering, especially with the millennials as first-time home buyers, I know a number of them, they're in relationships, but they're not getting married. So what have you seen about two people making good income? They're not married, but they want to purchase together. Is this something that, I know Judge Judy, she would rule against that, but what have you been finding? What are your thoughts?
You know what? And this is exactly why I mentioned that Fannie Mae and Freddie Mac have extended, in most cases, the debt to income ratio to 49.99% of someone's gross income. Previously, in years past, you would think, oh my gosh, that's like half of their income, and that's even before taxes. In situations where I have just that, like you described, where it's boyfriend, girlfriend, and they want to purchase together, I typically advise just let's use one person's income that can qualify to get them to the max, because we can take those expanded ratios. Most people don't want to go that high, but if they know they're going to have a roommate that's going to be paying half of that mortgage, they're more apt to take their debt to income ratio up to the max, and we can qualify them that way. I personally, this is just my own personal opinion, I probably wouldn't I wouldn't put myself on a mortgage with somebody else unless there was a side agreement by an attorney, et cetera. We're not going to be looking at it from a lending perspective, but I think that you as a consumer should protect yourself, either be on the deed, which gives you half ownership of the property. So like a boyfriend, girlfriend can be on the deed of a property and they don't have to be on the mortgage together. So the boyfriend can purchase the home up to the max of his income, and she can contribute monetarily to the monthly mortgage payment, be an owner of the home, and if they part ways, he has to remove her from the deed via something, whatever. She has to be a part of that decision. So there are different, ways to approach it. Everyone's situation is not the same as another person's. And that's where somebody like me, who is an expert that's done this for 20 years, has seen pretty much every scenario. Of course, there's some that I haven't, but you're not going to get that kind of service from a Quicken Loans or somebody online that, is just literally paper punching and putting in numbers. I'm going to go through the ins and outs with you, maybe consult with a real estate attorney and let you know exactly what the consequences are if you get on a mortgage together, et cetera. I want you as the consumer, as a first-time home buyer, et cetera, to know everything. So there's no questions asked. You're going to come back. You're going to be a repeat customer I've done loans for people that have purchased multiple investment properties. I would say 10 plus transactions with a single buyer. So that's where I am in my business and the long-term goal. But again, I think from a consumer perspective, you want to work with somebody that you can talk to that's available 24/7 if you need, and is just there to guide you through the process. And don't fixate on interest rate, don't fixate on APR, et cetera, because you're going to find that 9 times out of 10, if you see a lower interest rate, you're paying for it some way, shape, or form, but you're not getting the service that and what you deserve in the transaction to make you feel comfortable in the decision you're making, because it's a huge financial decision.
Your expertise is so clear. I mean, people should obviously be reaching out to you. You've been doing it for a long time. You're passionate about it. You've got a great way of connecting with people. One question before I turn it over to Kathy. You read my mind when you mentioned investment property. So what's trending in terms of purchasing residential property as an investment property and then becoming the landlord and renting it out?
You know, there are a lot of people out there that have, like I said, a lot of liquidity, have been sitting on cash because they weren't taking those vacations, et cetera, and want to get in the real estate market, especially since they see the property value skyrocketing. Fannie Mae and Freddie Mac did come out with certain adjusters for second homes and investment properties. And what that basically means is you're going to have a higher interest rate for those type of properties. And the reason why they're doing that is because they don't want people that have been in the market that now have a ton of equity in their house turn around and buy and scoop up all these $200,000 to $500,000 homes. They want the first-time home buyer to be able to get those homes. So they've added an adjustment to the interest rate for a second home purchase or an investment. So you're not going to see it as advantageous to purchase an investment property unless you pay cash. And I'm talking about upwards of 1% higher in interest rate versus the first-time home buyer loan. So it's kind of a deterrent. However, the rental property, the rents have gone up so significantly that even still, if you're in the market to purchase an investment property, more so than not, you're going to have to put 20% down. We do have a 15% down product. It's just super unattractive. I wouldn't recommend. And also, when you're buying an investment property, you want to have some skin in the game. You want to have some cash in there because it will improve the amount that you can take back in return on your investment on a monthly basis and your ROI. So I would say, there are opportunities out there. They're more in areas that aren't as established. I had a buyer call me from California who was looking to buy something in North Carolina. He's like, this is, this big Apple headquarters is going to be built there, and I want to scoop up property before. I mean, he might be ahead of the time. He might be behind the time. I'm not sure. But you want to look for, if you're an investor, those rare opportunities where maybe something needs a little fixing and it's worth $250, but you're getting it $225 because it's cosmetically not sound. Certain avenues like that, or pockets in the United States that haven't quite jumped in value, are where I would see an investor benefiting right now.
Thank you so much. Great information. Appreciate it.
So Ashley, I applaud you for the point that you were making about and speaking to the point of being on the deed, not having to be on the mortgage per se. And I mean, I can't applaud you enough for that, because I think you and I are a lot alike in the way that we run our business, meaning we want to tell you the good, bad, and ugly. You want people to know exactly what they're getting themselves into, so that, I mean, create the right buyer expectations. And I think that is, I just think that that's so key. And I mean, it speaks to why you've had so much repeat business, right? Right.
And you know what? I actually have a story to that. It's interesting. And this was probably 10 years ago. I had a first-time home buyer who had scraped in just like right on the gun with the debt to income ratio, credit score. And I knew he had so much potential because he was entry-level engineer from Virginia Tech, was going to go all the way up the ranks. But we had to get him into the market. And this was like 2006 when things are just through the roof. And he said, I want to buy the house next door to me. My dad thinks it's a great opportunity. I was like, look, you really, really need to just focus in on what we just did, which was get you in this home. You're kind of at the ceiling, but I know you have so much potential. don't look at buying that investment just because you're seeing the prices go up so high. It's going to put you in a bad situation long term, because if this market reverses itself, that's going to be the first to go, is that property. So he had already reached out to the real estate agent to look at that property, and I told him, I advised against it. Well, the realtor stopped working with me because I had said that, and he just wanted to make the sale, and he didn't care about the ramifications. Well, fast forward 3 years, they had a baby, they were outgrowing the home, and they said, we want to move up and we're coming back to you, because had we bought that house, we would have been bankrupt. We would have been in such a bad situation. And the realtor that we were working with, all he wanted to do was sell the house. He wasn't looking at the long-term scenario. And I've since done probably 2 or 3 refinances for them, like 4 or 5 homes. And I was able to turn around and refer them to one of my agents that I knew would be a good fit for them. So, you got to think of just what the livelihood of the homeowner and what their long-term and short-term financial goals are, where they are going to be, 5 years from now, 10 years from now. And, real estate is a great investment, but you have to be, like you said, Kathy, cognizant of, what is this going to do to me in the long term? Am I making the right decision? And just have a full suite of options, as well as let them know the consequences, the ins and outs, and just be very, very transparent about real estate.
Yeah, no, I totally agree. And it's like you said, building the rapport, because that's what I like to do with my clients. I want to know what you want, and where are you going? And for me, how are you going to live in the space? And I think that over the course of, working with someone, whether it be a week or a month or what have you, I think that ultimately that becomes very clear that, hey, this person really cares about me. I don't know why, but they really care. And one thing about you, Ashley, that I noticed, I want to say that I'm perceptive about people, but from the moment that you started speaking and talking about your spiel at BNI, just for those of you that don't know BNI and what we do, we go around and we kind of give a little infomercial about our work and what kind of referrals that we're looking for. So, but from the very first time that you got up and started speaking, I was like, I like this person. I like her a lot. She's smart. She knows what she's doing. She speaks with authority. She's confident. And I wish I had known her when. No, look, I'm just not, I don't just give out compliments
willy-nilly.
Yes. Yeah. They have some substance, and you are, I like I said, I wish I had known you when. I would have worked with you in a heartbeat. But now we're here, and hopefully we'll get you lots of referrals.
It's honestly, over time, there's trials and tribulations. You learn, like with any business, and with any kind of situation you're in, you learn how to go through objections, how to go through different obstacles and come out and persevere. So, it's taken years. I'm no spring chicken anymore, but it's
Well, it looks like we're going to take a commercial break at the moment and wait for Ashley to come back, and we'll have more conversation. So stay with us here. We're going to listen to a few sponsors, and then we'll be right back. Thank you.
The session that we had with BCAT was really entertaining and enlightening. We were able to put together some very specific steps that we as individuals can take, and it was really fun to all come together and see sort of where we're going as a team and how we can all get there together.
We had a tremendous experience with the BCAT partners. One of the challenges that we have as an organization is to make sure that we have the right people in the right chairs doing the right thing. To do that well, you have to have synergy. You can try to dream up ways to make sure that your group does that, or you can rely on experts. We would recommend BCAT Partners to anybody who's looking to take their organization to the next level.
Largest purchases for your life and for retirement, for just your overall portfolio. You want to work with somebody that's a financial professional that has great bedside manner, is going to steer you in the right direction, does not have ill intentions. You want to work with somebody who wants to work with you for life on whether it be your first home, an investment property, a second home. So somebody like me, a licensed mortgage professional that works at a correspondent lender, which is a local lender, is going to be your best bet. Is going to help you be most competitive in this market. As we talked about before, and in different pockets of the United States, you're seeing just a rapid run up of equity in homes and lack of inventory, and therefore prices being driven up, and competition. So competition is one of the biggest questions I get from my referral partners, be it a realtor, which is my number one audience or referral source, or an accountant, a CPA, obviously, and financial advisors. They're all saying, like, how do you stick out in front of the competition as a home buyer. And that's with working with somebody like me who has a great reputation, a company that has a great reputation, to where when I write a pre-approval letter, I have done my due diligence with the home buyer. I've walked them through the process, let them know exactly what they qualify for. I tell them what the cash to close would be with their down payment, closing costs, what the monthly payment would be. So we're all on the same page. We're all on the same page in terms of what we're doing to be competitive, whether that be scratch a financing contingency, a home inspection, a appraisal contingency. I'm guiding the buyer into, what are the consequences if the appraisal does come in low? Can we shift the loan to value? Are there creative options? But we want to be able to put our best foot forward. And that's what someone like myself provides, is the guidance to get someone into a home so that they're comfortable, they are fine with the monthly payment, the cash to close, but more so than anything, they know the ins and outs of the contract. They're not encumbering their deposit that they put on, or, at risk of being sued because they just didn't have the proper guidance. So working with someone like me, a local mortgage professional, regardless of what market you're in, is going to be your best option when it comes to purchasing a home and, identifying the best mortgage for your needs.
Fantastic. Thank you. And just to clarify for people who are watching or listening, what is the area? You mentioned Northern Virginia, DC.
Mm-hmm.
Like, give me a little specific so that people know.
Yeah.
She can help me.
Absolutely. I covet this DC metro area. I'm very well known in the Loudoun County region of Northern Virginia. And I grew up and was born in Fairfax County. So at Fairfax Hospital. So what's great with that is that I have a lot of people that come into the area. Like I said, it's very transient, the DC metro area. And I'm able to kind of give some guidance as to, okay, you have little kids, you probably want to be in this neighborhood. So I do more so than just what my job is. I'm not a licensed realtor, so I'm not bound by the same guidelines where I have to, I can't say, don't go here, don't go there. So I give some kind of proper, like I said, you get more of an experience with somebody like me who's been here locally. I am also licensed in North Carolina, Delaware, like I said, DC, Virginia, Maryland, Florida. So I have a lot of clients that, like I said, are buying second homes, especially after the pandemic, and seeing what that did to bring a lot of home buyers, a lot of owners of homes back into their home to work from home. And now they are able to work remotely. So I have a lot of people that have either bought second homes in Florida, moved to Florida, North Carolina, or if you go on our website, AtlanticCoastMortgage.com, you'll see where we're licensed as a whole. But I particularly have, strategically gotten licensed in areas of where I do the most business. And again, that would be Virginia, DC, Maryland, Delaware. I do a lot of Eastern Shore. I have a second home in Delaware, Fenwick Island area. So I do a lot of business there. And I'm trying to certainly increase that business. But North Carolina and Florida are also very popular areas at the moment.
But to all these areas that you're licensed in, if like say that we have somebody listening in and they're like, oh, but I want to live in Arizona or whatever, still reach out to Ashley. And she can at least refer you to someone that will give you the Ashley Smith treatment.
Absolutely. I'm very well connected, as you know. So I do, have connections all over the U.S. And certainly can refer out. And if I don't, then I'll, go to somebody who's like-minded, is of the same ethics, and ask them who they would refer. And so, you can always come to me. It's a one-stop shop.
Yay!
Yeah, fantastic. Yeah. Ashley, you brought so much fantastic, valid, relevant information to make the whole process seamless and easy. And I can see why you're so successful in what it is you do. I'm going to spotlight you. And for people who cannot read the banner or they're listening on the radio, can you share your contact information and who would you like to reach out to you?
Sure. Thank you. The best way to reach me, you can go onto my website, which is www.ashley, Smith, SMITH, team, TEAM.com. So AshleySmithTeam.com. If you go on there, it has all my contact information, bio. It has a link where you can click to apply. So if you are in any of those areas where I have my license, which you'll also see on the website, you can go on and apply right there for a pre-approval. But I have a full service team. I have an assistant, a team loan officer, a processor, underwriter, and closer. So we work very closely together. It's a very streamlined process. If you hit that Team Smith email that you'll find on my website, it kind of hits everybody in my team. And therefore, we're able to answer questions, nights, weekends. That's really when this business happens. So just know that no time is inappropriate. If we, are sleeping, we'll of course get back to you in the morning. However, certainly reach out at any time, and more than likely you'll get a response right away.
Brilliant. Thank you so much. And thanks for being here and just sharing all of this really important information. Please do come back and see us on this show or any of our other shows. The business show would be a great one as well.
Yeah. Thank you so much for having me today. I really appreciate it. I'm sorry for the technical difficulties. Apparently we changed Wi-Fi, so I had to get that password. But thank you guys for your patience with that. And I really appreciate you having me today.
Oh, thank you so much, Ashley. And you need to come back because the market it's going to be going up and down. And I know that everyone that's listening, you provided a wealth of information. So thank you so much.
Thank you. Yes, of course. Absolutely. I'd love to come back.
Thank you. Enjoy your dinner tonight.
No, thank you. I will.
Yeah, absolutely.
My son's birthday and my husband's birthday in the next few days. So we're going to celebrate.
Combination.
Fantastic.
Yeah, awesome.
All right. Thanks again. We'll see you soon, hopefully, on another show.
Okay, bye, Ashley.
Bye.
I love her.
Yes, I love her too. She's contagious. I feel like she's just has so much positive energy, and she's so what's the word? She knows her stuff. She knows what she's talking about. And she's the kind of person that you'd like to work with, because she has that true sense of leading with her heart. When she was talking about it's about the customer journey and experience. It's not about, marking down another, closed deal. So. Right.
No. And that's, I mean, like I said, from the moment that I met her, the moment that she began to give her infomercial, I just feel like I'm intuitive that way. I don't know. But she spoke with authority and confidence. But at the same time, I felt that there was a real sincerity, and I just liked her. And I think a lot of people, I want to work with people that I like, but I also like for them to know what they're doing. And I mean, clearly, hands down, she is, she's amazing. Amazing.
Yes. Thank you for bringing her to the platform.
Oh, I was just so glad she agreed.
So Kathy, I'm going to spotlight you because your show is coming up right around the corner. So we need to close out, but I'd love for you to share with our audience how they can reach you. And if you share with them a little bit about your Talking Head series, what they can expect to learn from you today.
Yeah. So if you have any kind of design issue or needs, whether it's a remodel or you're just starting from scratch, please feel free to reach out to me. You can check me out on my website, which is Kathy Fulton Interior Design, and that's Kathy with a C. Or you can call me 703-895-3798. And now the next show after this, we are going to be talking about the best colors for painted kitchen cabinets and for the year 2022. So I have a lot of ideas, a lot of different designs. So stay tuned.
All right. I love that. All right. Fantastic. Well, I'll let you go get ready for the next show, and I'll see you over the other studio.
Got it. Thank you so much.
Thank you. Bye.
Bye.
Thank you, everyone. We just love having you here, whether you're watching us on the live or the replay. As I mentioned in the beginning of the show, we have 20 to 25. I think this week we have 28. I'm going to have to change my numbers. Shows each and every week. And if you follow us on a regular basis, you'll see that we just cover all types of discussion areas. Yesterday, in one of the shows, we were talking about clinical trials. It just opens my eyes every day. I think to myself, I can't believe how blessed I am that I get to learn all this information. And hopefully you're taking advantage of what it is that we share here. We're all about education and entertainment. If you'd love to be a guest on one of our shows, please go over to our website, usaglobaltv.com. Book your session. Okay, we've got a full day of shows. After this is Talking Heads, which I mentioned. Then we have the Corner Bookstore. Then we have the Film and Music Show. Then the Wise Ones. And we finish out with Talking Heads. And our expert presenter for that one is Red O'Loughlin. So please do stay with us wherever you are. I'm going to go over to the other studio and join Kathy for Talking Heads. And I look forward to having you with us there too. Thanks again. Bye.